Welcome to the Mind of Business Success podcast. I'm your host, Alicia Kramer. Our guest today is Jeremy Krell. Let's talk about investing in dentistry. Welcome to the show, Jeremy.
Thank you so much, Alicia, for having me. I'm glad to be here. It's a real pleasure and looking forward to a good chat today.
I mentioned investing in dentistry, not a topic we've had before. Some people might be thinking that is very niche, but let's talk about what you're doing in your business and show people how they can actually start to make some money investing perhaps in dentistry. So why don't you start by telling us a little bit about your business?
Yeah, absolutely. So first is maybe context a little bit about me. I'm a general dentist by training. I don't actually practice dentistry anymore. But my, kind of career arc and to the point of mindset is one that comes from really a startup background. First as a tech leader and had a few exits there. Then health tech, had an IPO. Then dental tech, led an area of a big company, and then into dental tech investing. So I've kind of shaped my career as I've gone and transitioned from, clinician to startup operator, from startup operator in general areas like tech to more specific or niche areas like dentistry, from being an operator into being an investor. So I've kind of changed mindset a few times here, and so thought it would be consistent with the podcast. So a little bit about Revere. It's really the first and only venture capital fund investing in dental technology. So really was back to my sort of problem solving inner core, which is seeing this, first of all, old industry, right? Dentistry's been around for hundreds of years with no venture capital fund. Thought that was odd, right? I also think it's, although niche, meaning, very focused, it is by no means small. Right? There's about $180–200 billion a year just in the United States spent on dental care. That doesn't count any of the product markets around it, right? So if healthcare is about 18% or so of GDP, dentistry is about 3.7 to 4% of GDP. It's not a small industry, even if it's focused or niche. And so I thought it was also odd that there was no VC fund there. And then lastly, it's an innovative industry. If you go to your dental office, local dental office, you probably see they have a lot of toys and gadgets and gizmos and software. They've got a lot of stuff in there. And they're always, kind of playing around with different objects and taking them apart and putting them back together, or, even just custom adjusting them to fit in your mouth, right? And so there's no lack of innovation in the space either. Right. So really there has been this lack of organization around the supply of funding opportunities in dentistry. And so that's really where, I started to just, in terms of mindset, found it odd. Because I found it odd, dug deeper, asked questions, because especially here at Revere, we have, a very kind of curious mindset. An analytical mindset. So we just kept asking questions. Why is that? Does it need to be that way? Should it stay that way? And got to finally the solution we wanted to deliver. So I hope that's helpful context.
Well, I think it is. You covered a couple of key points that I think would be great to expand upon, because you were able to see very clearly that there was a huge gap in the marketplace. There is obviously an industry here that is full of revenue, full of money, full of potential. And it is not being served in a way that would be advantageous to obviously a lot of people, the private practices, to, the individuals who are passionate about these things, who could be investing in this area. So then, from your vantage point in your business, how are you making these connections? How are you bridging those gaps, and you're connecting the dots, so to speak, for expansion in these areas?
Yeah, so I think there's two ways where we've built infrastructure that allows for the connectivity, the wires or the pipes that just weren't there to connect the dots. So one of them is in kind of the bread and butter of any venture capital fund, right, is really connecting great startups and great investors or money from those investors, right? At our venture capital fund, when you invest in a venture capital fund, you're relying on the fund managers or leads, right, the managing director, partner, to make those investment choices for you, right? But you have to, of course, gain confidence and conviction from the investor to put their money in the first place, right? So the first bit was, and is for any venture capital fund that raises capital, is to really connect the industry side, the startup opportunity, the innovation with the investors, right? And get the investors to see that there is real potential in the innovation that's there. So I think a huge part of that, us doing that, at least initially, was around, first of all, data and research. We actually started with a data project before we, effectively, really before we got into some of the mechanics of the fund. We created this big retrospective database that had never been created before. And so that consisted of about 700 or so companies that were all dental technology startups that changed their value over time. We indexed it by the type of company that it was, product, also by the stage of funding, seed or Series A, for example. And so from that data, we were able to report back performance, right? We were able to show that, these, here you see it, right? These take X amount of years to get to Y return, right? The net average there was, it took 5.2 years to reach a 4.8x. Right? That was our very first paper. We're now multiple times published. Beyond that, we showed the correlation to how the other parts of the dental industry perform. For example, private equity funds investing in dental practice roll-ups. We show how it performs against other healthcare startups that are not dental startups, et cetera, et cetera. And so that research was really helpful for people to see some of the stats that in other sectors you can see immediately. And get from some of the available databases, but that were just not available in dentistry. So that helped a lot. When we opened up the floodgates to the fund, and built our initial deal flow, meaning opened up our doors to all the startups that were raising money, it was important for us to be able to go back to the investors and say, see, here it is, right? Especially for those that were skeptical of, are there enough dental startups raising money, especially enough good ones, that there'd really be a good investment opportunity for a fund to focus on this area, right? That was a lot of initial, skepticism and criticism. And I kind of chuckle at that a little bit, because we now stand at a little over 800 qualified dental technology startups trying to raise money from us. Organically, we meet 2 to 3 new per business day. We are swimming in deal flow. We do have a problem there. It's the other problem. It's not that there's not enough. It's that we have a significant staff built on our deal team and our analyst teams, to shop among these and diligence them, to pick out the very best. Right? We've made 34 investments to date out of those 800, so we invest in about 3% of them. There's even more investable deals than we're investing in, but there's a lot of depth there. The other side of what we do is a little less traditional for a venture fund, but to your original question of, kind of how do we connect the dots, right? The other big gap that we saw was that the larger industry side of the dental industry, the big corporates that sit on what we call the organized side of dentistry, so the large manufacturers, distributors, insurers, these dental support organizations of practice roll-ups, et cetera, these very large corporates. They want to, but they don't really have a great way to talk to the startups, right? And conversely, we see the same thing. The startups really want to talk to, these organized corporates in dentistry, because they want a scale partner, they want an exit opportunity, whatever is their goal. But the two have a very hard time connecting. They don't, especially the corporates are not necessarily staffed, with a lot of people who are focused on handling this type of deal flow. Internally, they have many, many, many departments and sub-departments and, big corporate structures that make it, sometimes difficult to navigate to the right person or decision maker. They don't view things the same way as the startup, right? The startup is, we've created something, that's the best thing since sliced bread, and the corporate is, we use things that are proven over 10 years. And take very much a private equity kind of mindset to historical performance, versus a startup is showing its projected for performance, right? So there's interest on both sides, but there is lack of communication ability there. And so Revere has really filled that gap by connecting the two. We have a host of off-the-shelf corporate services that live under an entire corporate services department that we have. And what we've done there is create a hotbed of innovation, especially for our portfolio companies, who can now be much more connected to these corporate partners, because we're serving them and serving as the intermediary between precisely what they're looking for and what's available in the market.
That's awesome. So you took another area that was severely lacking and found a way to help sort of plug that hole in the bucket and make it a win-win, obviously, for both sides. So you talked a couple of times about mindset and some of the different shifts that need to really, you have to embody a certain mindset in order to create this type of synergy, to create the type of business that you're creating, which is innovative in its own right. And you're connecting innovators with kind of like the old corporate dinosaurs, and you're bringing, new energy and new life into this industry that, just like every other industry, is always going through growth and transformation, kind of keeping up with the times. We don't necessarily do things the way that we did even 10 years ago, whether it is in the dental office or at your doctor's office or anywhere really for that matter. You're seeing technology and innovation everywhere. McDonald's even, has the robot locations now, So are you noticing that certain people, whether it's on the investor side or even within some of your aspiring tech startups, where there is a little bit of that struggle to embrace some of this innovation and change in the marketplace?
Yeah, I think that's right. And to add some more layers, to that, from the investor side, right? There's a huge call to action for investors to change their mindset about investing, right? If you look at it from that perspective, I think we've seen a number of disasters, over the last 20, 25 years, right? From what 9/11 did, to what the 2008 market crash did, to what the, sort of black swan multiple sigma event of the pandemic did. Now the bank crisis is doing, right? We've seen a lot of turmoil, from an economic standpoint, inclusive of a great recession in just the last 20, 25 years. And so I think investors in their minds, and when I say investor, right, I mean, us small business owners and workers, right? I mean, anybody who's got any type of liquidity, even a modest amount, and has to think about where to park that, right, for their long-term, lifestyle purposes, right, is thinking about this, right? No matter what the, level of risk of investor overall you classify yourself at, or, no matter how well you're, almost especially how well you're diversified, we're all thinking through, right? We had this list of things that we did and we invested in, right? We listened to our brothers-in-laws and sisters-in-laws, our CPAs and CFAs, our buddies, effectively, about where to put money. We would put it in CDs and mutual funds and real estate, where we kind of cluster it in the same things over and over and over again. Certain, public securities with the stock market. And I almost every investor is, I think over the last 20 years, looked back at their portfolio and said, some of those things just aren't working how they used to work, right? And so they're sort of reorganizing the totem pole, if you will, of where they're putting investments. And venture capital used to be this tip of the spear, or the most risky thing that you could be involved in. And I don't know much about startups. I've heard a lot of bad stories, and I'm not going to put my money there. But I think given that, you have to be looking at that stuff based on what's happened over the past several years, we've seen a lot more focus on venture capital. Why? Because it's a lot less risky than putting your money directly into a startup, right? You're dealing with fund managers who have a significant deal sourcing process, diligence process, significant track record to how they invest and what kind of performance they get, the support that they give the startup after investing in venture, in a VC fund is a lot less risky than investing directly into startups, right? Where you're putting more chips in one bucket. And, it's when you're choosing that as a single individual, you're not able to do the level of shopping and diligence that a fund can do. And then, I think, it's thinking about what types of funds, right? Because even in the world of venture funds, if you invest in a generalist fund, what's their differentiator? There's a lot of funds that invest generally in tech, right? So we've seen the rise in the last couple of years of some more focused funds, right? Especially focused in areas that have a strong historical performance, or are, relatively recession resistant. And dentistry is one of those spaces. So if you invest in a fund that is in a niche, sort of protected space, this should go on the totem pole, for people thinking about where they should invest. And you kind of have to take it upon yourself. Your CPA and CFA, they're trained on certain things, right? They're not gonna suggest every investment opportunity for you. They are not a broad spectrum, kind of approach. They know their bread and butter, and they stick to their bread and butter. And that does not mean diversification for you. So I think, from the investor standpoint, we've seen a lot of change of mindset. I think, in my world, from the dental practice standpoint, we've seen a lot of change of mindset. There used to be a way you'd run a dental practice, right? And I think we've all seen it from at least the consumer experience side. You kind of go in for every appointment. Historically, the practices have been somewhat antiquated, compared to what's expected in consumerism today. You kind of the consumer would always have to go like 70% and towards the practice's direction, right? You wouldn't see the practice kind of bending over backwards to, kind of meet what the consumer would want. And in today's world, you're seeing a lot of innovation, from the dental practices perspective. They're maybe even a little bit behind the average medical practice, right? They need to digitize all their electronic health record systems. The technology they use to collect patient payments, right, was a mess historically, and is not consumer friendly. Now it's much, much easier, right? There's the imaging techniques, right? You used to have those gooey trays in your mouth. Now you have a camera that, pop, 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 and it's done taking pictures of every, tooth structure you have in the mouth with a full 3D reconstruction, right? You've seen a lot of advancements in technology, that have largely allowed, that experience to be better for the consumer. And so when we speak to the dental practice, right, we're also changing their mindset, saying, but hang on a second, for our dental practices that invest, and our fund is open to any investor, right? But for the dental practices that invest, we say, folks, you're invested in the practice itself, right? But how are you don't own anything in your practice, right? Which is a little odd, because at home, you do invest in the stuff you like and that you use. If you're an auto person, you invest in, auto. If you're big into energy, consumption and conservationism, you're investing in energy, right? If you use Apple, or, for every one of your electronic products, you probably are invested in Apple, right? And in the dental office, they don't do that. They have no ownership over any of the technology. It's all just a depreciating asset in there, right? And if anything, they haggle with the vendors to try to get a discount. Hey, instead of charging me $200 a month, I want to pay $190 a month, right? And so we find ourselves in this position with investors from the industry. So it's, those outside of the industry, it's what I said before, it's reorganize your totem pole, and where's, focused venture capital. To those in the industry, it's, you don't own a single thing in your practice. Forget about the discount. Who cares if you pay $10 less a month on that thing? That doesn't get you anything at the end of the day, right? Instead, own a piece of that company that is now growing in value because you're using more and more of it, and you tell your friends to use more and more of it. And when that company has a financial event, you will have a financial event. That is going to be far superior to any 10, 20, $30 a month discount you're spending a lot of energy negotiating over. So really making Revere work from just about every perspective: the corporate partner, the investor inside or outside of the industry, the dental practice. It's really all changing mindset towards where the times are taking us in terms of both technology innovation as well as financial opportunity.
I love it. You've just shed so much light on so many different areas where people do need to expand their mindset. They need to look at things from a different perspective. You had stated a little bit earlier with respect to people looking at where to put their money. And that's why I love having individuals like yourself come on, because it's true. There are a tremendous amount of opportunities out there. Nobody is going to think to themselves. You're not sitting around thinking, well, what industry could I invest in that has never crossed, my desk before? It doesn't happen. And so there are these little, these little treasure troves kind of hidden, amongst all the other stuff. And everybody is looking at, what's the best stock to invest in, or, where do I park this, or where do I do that? Or, and you're right when you say, look at those industries. They're not going anywhere. Even if the dental industry is a little bit slow in terms of its innovation, it's not going anywhere. And that could begin to exponentially, gain traction in terms of innovation, because we see it all the time. Businesses are sort of just clicking along, little bit of growth, little bit of transformation, little bit of change, little bit of innovation. And then all of a sudden, it seems like out of nowhere, they'll sort of like rocket into the stratosphere. And then you see the industry just sort of take a whole new trajectory. But a lot of times we're looking at the companies that are a little bit riskier. They might be innovative, but it's something new. It's not something proven. It's not something time tested. It's not something that we know is going to be here for the long haul. And personally, and I'm sure most people listening would agree, I want to put my money someplace where I'm pretty sure, it's not going to be as turbulent as, say, cryptocurrency, where today my Bitcoin is over, $40,000, and, 2 weeks from now it's 20. It's like, ouch. Right?
Exactly. People love a good process, right? They would love, and there isn't this solution. Maybe we should create the solution, but they love I want to answer 5 simple questions as my onboarding of an app. And then the app is going to pop open this perfect portfolio for my persona. It's going to tell me I should have, I should be 20% invested in public securities, and I should have 10% in mutual funds and another 10% in CDs, and I should have 15% in venture capital. And then it's going to take me through a guided process where I just click off the ones that I want to be in. So, that first bucket, it'll give me some options. I'll just click, click. I like these 2. Next bucket, some options, click, click. And then at the end, I put in my, bank account and routing number, and I click go, and it distributes it all perfectly for me. It shows me on a dashboard. I can set the settings so that when things hit the fan in the industry, it's just going to pull them right out of there before anything goes wrong. And it gives me these like daily digest or weekly digest updates so that I can sleep at night and know that things are okay. Great experience. My investing is done. Don't have to worry about it anymore. TurboTax for investing, right? This is what people really want, right? And expect out of technology today. Folks, sorry, it's not there. It isn't. It is something you just have to do more work on until that is resolved. It's a sticking point for people because not everybody is as comfortable and familiar, or have received education in some of the basic principles of investing. They don't all have to take, economics or an investing class in high school. They don't get home economics with some of these historic, classes and requirements that have been there, are just not, we've opted for optionality. So it's just not there. And so people have to kind of self-teach, and that's that there being a precursor is being an obstacle to really doing this. And so they outsource and rely on other people. And the other part of it is human nature, right? The human mind is really not good, from a research perspective, at making decisions when there are multiple categories and multiple different options in each category. These complex, decision makings, especially where there's risk or statistics involved. It's a better scenario, frankly, for a computer or software than it is for the human mind. The human has to be in the loop, but it is not inherently the best decision making process for how the human mind generally works. And so that makes this area a sticky area. And it is something that, people have to kind of roll up their sleeves and get it. It would be easier for me, right? If there was this, there were these 5 companies that run these, perfect investment portfolios, and we could get ourselves listed on each one of them in the venture capital section. And, everybody would find us, like a patient finds a doctor if they go through the insurance, provider directory. And it's just, I get to pick up a lot of traffic just from being listed, right? Sorry, doesn't work that way for us either. We have to go educate the public on, even thinking about these areas, right? Even looking at, hey, this CPA or CFA that I've used, trusted, has worked for me. I'm seeing the same thing over and over again. Like, why aren't I seeing venture capital here, right? Just to get the person to ask that question. Why am I not seeing other options? There must be other options besides what they show me each year, right? And so that's something we spend a lot of time thinking about, how best we can educate more broadly on wealth management. Sometimes we're even educating the educator, right? We're educating the wealth managers that, hey, think of venture capital. Don't think that it's necessarily as risky as you maybe once heard. Or previous 20, before 20 years ago, the way that it was, right? And so that definitely is a struggle here. But when it comes to the dental industry, and your point, it's true. Everybody needs a dentist at the end of the day, right? The dental practices aren't going anywhere. They've been around for hundreds and hundreds of years, right? So just think about that when you think about the space. It's interesting because we moan and groan inside of the dental industry about patients not going to the dentist enough, this non-compliance, right? We have it kind of stuck in the dental industry's minds that they should be coming twice a year. And when they come one time a year, or on average 1.5 times a year, right? However it works out, once every 9 months on average, they come to the dentist, which is not what we're asking them to do. We get all upset. But if you actually look at the stats, right? People come to the dentist much more frequently than they go to the primary care physician, right? So they are coming to the dentist, right? And they come a lot, right? If you look at what happened during a black swan type event, general dentistry practices largely were shut down across the country for 3 months, completely shut down, right? And if you look at the following 12 months, 18 months, 24 months beyond the opening up of dental practices, you will see clearly that the industry has performed even better than par. It is actually accelerated beyond where the industry was from a performance standpoint prior to the pandemic, right? So it's also therefore accelerated innovation in the space. So you'll see that, right? If you looked at our fund's performance, you would see, right, we mostly measure by this IRR, internal rate of return, where a normal tech fund is at 20 or 25%. We're at 35%, right? And that's because of having a strong foothold in a niche industry. And what that really means is the startups in our portfolio are actively increasing their valuations and or increasing their revenue and their growth, right? We Revere, we measure that internally, right? So if you looked at the other side of the industry, the dental practices, they return currently between 21 and 22 at about 13.1 to 13.9, what we call turns on EBITDA. That's a really silly, jobbled up acronym, and I'm not one for acronyms, right? That means earnings before interest, taxes, depreciation, and amortization. Basically, a better measure, they have a lot of free cash flow, right? And historically have done well, is really kind of the gibberish there. And so, this industry is one that performs, right? So, you should be thinking about investing in spaces like this among the other things you're investing in. Your portfolio should think about diversification, but you have to, in order to get into a space like this, you have to first break out of what your usual and common, your ordinary process is for this. You have to ask the questions analytically and from a position of curiosity about what else is out there that I'm not seeing. And then you have to go execute, right? You have to go pursue that if you have found something in that process that wasn't in your part of your portfolio before. So it really is a change in how you're doing something, and change is inherently hard for human beings. We like routine, we like a process, but sometimes there's real rewards, there's real upside to gain from going outside of your bounds.
This is the perfect time for you to share with our listeners how they can connect with you, learn more about this. So can you share your website and anywhere else that you would direct our listeners to?
Yeah, sure. Happy to. Our website is reverepartnersvc.com. And you can reach out directly to me, Jeremy, at reverepartnersvc.com. And we're always happy to continue the conversation with anybody interested in Revere Partners, the investment opportunity here, the innovation behind the startups that we're involved in, that we see, or anything that we can do to help set you on your course.
Awesome. Great conversation. Thank you so much for being with us, Jeremy.
Thank you for having me.
And thank you to all of our listeners. We're doing this for you. If you haven't already subscribed, make sure you do so. And until next time, we will see you in the next episode.